I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see?
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith, and for episode 96, my gosh, I decided to have a special guest on the podcast just to finish off the month with good old Life Insurance Awareness Month. And I thought, who's no better than Neil? Me and Neil were connected with Christopher Lawrence, and I always love to promote him. And we were actually side by side during the pop-up community workshop, right? Workshop. So I was like, you know what? We know better than to talk about this lovely stuff called life insurance, because I don't talk about it per se, but I'm happy that you were able to, bless the stage and all that stuff. Neil, how are you, sir?
I am fantastic, and it's a privilege that I'm on episode number 96.
Yes.
Podcast number 6. This is exciting. This is the first time I've been on a podcast, so thank you for that. This is good. This is a sign of progression for myself, that connecting with individuals that have a following, and I'm excited. I'm excited for life right now.
Nice. And I have to do my regular sound thing for it to be your first time.
Yeah, absolutely awesome.
And actually, let me ask first. How was your experience at the pop-up? Because I loved it.
The pop-up was amazing. Here's what's amazing in 2022: when people leave their homes to go to an event, to go speak with other business professionals, and when the weather was so summer, beautiful, Caribbean hot that day.
Yes.
The weather was no better place in the world, right, on that day. Yet people decided to leave their homes, leave Netflix, leave their cell phones for a couple of hours, and come out and get some air conditioning, which is wonderful, and just communicate with other business professionals that are doing their best to help their own personal families, but are also blessing other businesses or other peoples in the community with their products and services. So it was awesome and refreshing to speak with like-minded professionals, whether it was the other businesses that were there sharing their services, or even the people that were walking in. It's always great to communicate with live people in this digital world that we're in. It's awesome to interact live and in person. So I love the event.
You know what? Now that you say that, it's so true, because that day was beautiful.
Yes, it was.
It was a really beautiful, beautiful day. And just the fact that people were able to take time out. I'm glad you mentioned that.
Because it was a Caravana Saturday. It was
I think it was or the week after. I think it was the weekend after, because there was no way people would have went.
Well, yeah, the weekend after, or either. So it was in July, though.
It was you know what it was? It was that Kingston Fest that was happening, and Jerk Fest and all that stuff.
Right, yeah, the Jerk and all that stuff was going on. Right, yeah. But it was a warm up. It was a warm up. That was a warm up weekend to the Caravan. Absolutely, yeah.
Right. And you know what's the funny thing is, we had the corner, and it felt like we were like the financial service corner.
Yes, absolutely, absolutely, and it was so amazing, to be happy where we're positioned,
Yeah,
um, because we're both helping individuals and businesses with our services,
exactly.
and that complement. So it wasn't a competition thing. No, no, no.
No.
Both of us trying to help other people in the community with the services that we've been licensed to offer.
Mm-hmm.
Uh, and the experiences that we get to share with other future people we get to sit down with and help and just provide that professionalism. So yeah, it was awesome.
Right. And I know with me saying that, I guess it's safe to say that how long have you been in the financial service, or let folks know like
Sure.
what services you provide, you know?
Okay, great. So I am privileged to help people with life insurance.
Okay.
Privileged to help people with their investments, because they go kind of hand in hand in the way we do it. Privileged to help people with their health benefits. Over the last couple of years, people have an opinion on their health and how to maintain their health. So
Correct.
I'm definitely excited to help people if they started their own business, they left the corporate world, to
Mhm.
provide people with our health benefits. Definitely help people to privilege help people to get into home ownership with mortgages. Um, I'm privileged to help people get out of debt, which is a key issue. Home and auto insurance.
Mhm.
Definitely, everybody has an opinion on their home and auto insurance. Happy to help people with that. If people need wills, I can provide that service as well. And the most exciting thing that I get to do is
Mhm.
give people an opportunity to earn an income,
Nice.
um, which is a privilege and an honor, and I'm excited to do that.
It sounds like you have a lot of things under your belt, and you're an expert of all of them, because especially the life insurance and health benefits.
Mhm.
Obviously, during this pandemic, a lot has been happening,
Yes,
and we've
absolutely.
been noticing that. Well, I've noticed that there's been a lot of GoFundMe's, and I think the best way with when it comes to life insurance awareness
Hmm.
is how are we able to show people
Right.
how important life insurance is, because
Okay, great.
still boggles.
It's a great question, and people have to understand the true purpose of what life insurance is.
Mm-hmm.
It's for the people that are depending on your income.
Exactly.
If you have people depending on your income, you
Mm-hmm.
must be insured. If you had a toaster oven
Mm-hmm.
that when you push the buttons down, it will pop up $5,000
Yes.
2 times a month, would it make
Well,
sense? Would it make sense to insure that toaster oven so that it consistently pops out that $5,000 each month? And that
absolutely.
and that's what people need to understand. What the life insurance is for is to replace your income, or in the event if you have any debt, to make
Mhm.
sure your debt is not passed on to anybody else. Um, the real understanding of life insurance really is, people just have to understand, is we all know our date of birth.
Correct.
We just don't know the date we're going to pass away.
That is true. And if you were to know that, what would you
You know what
do?
I mean? Right,
Actually, yeah. If that was the case, like, what would you do? You would
right.
want
You know
to
what I mean?
be, you would want to secure everything for your
Absolutely.
family.
And to make sure their financial future is not compromised.
Exactly.
And when we look at understanding life insurance, one, there's because typically there's three reasons why, two major reasons, and the third one I'm going to let you know is a joke. There's only three reasons why people don't get life insurance. Okay.
Okay.
Reason one, they plan on getting it, but they just
Mhm.
never get around to do it. They know it's supposed to be there, but they never get around to do it.
Fair.
Okay. Which is a dangerous state.
Yes.
Okay, because when you need it, it may be too late, and
True.
where you finally get to it, it's too late. And it could be too late for a variety of reasons. Second reason is they just think it's going to cost too much, and so they shy away from it. Okay, and then the third reason, they just don't love their family. But that's not true. That's not true. People do love their families.
Time out, time out. I've never heard that before, but that's wild. If you were to say that to someone, they would probably be like, whoa, whoa, whoa. I do love my family. So why don't you have it?
Exactly. Because ultimately, if you're responsible for your family's financial needs when you're living,
Correct.
Why don't you think you should be responsible for your financial needs if you passed away? It's not fair to put your family's financial burdens onto someone else. That someone else needs to protect their financial future.
True.
So whether it's if you have if somebody has their own children that they're taking care of, and then suddenly they're responsible for now their nieces and nephews, their future. Sure, out of the sure love and affection for the family, they're going to do that.
Correct.
But at a cost. Something's going to have to get sacrificed. If their source of income doesn't change, then something is going to get sacrificed. So it's very important we be honest with ourselves and say, you know what? If we have dependent children or if we have debt, I'm responsible for it.
Correct.
Me and my spouse, or if a spouse is involved or what have you, partner, we're responsible for it, and we're going to make sure that our children, if the children are, their financial future is not compromised. Correct. If we look at just with the cost of homes, even to rent a home or live in a home and carry a mortgage. I talked to a lot of real estate professionals, and the number one question I asked them, for all the clients, majority of clients that you've sold homes to in the last 2, 3, 4 years, how many of them were 2 income earners that qualified to help them get into the home? They over 85%, it's 2 income to get in the home.
Yeah.
So therefore, if 2 incomes help them qualify to get in the home, and 1 income doesn't come home, how is the single breadwinner now going to be able to afford to maintain that property?
That is a great question.
Now, the typical some response will be, oh, they'll just sell the home. Okay. Yes, the home can be sold, but does that mean where you choose to go live now is going to be in the same area that was convenient either from an education perspective for the children, from a work perspective, either it's if people are still commuting to work or what have you, the area, the quality of the area that you live in.
Yeah.
Does that mean that now with the new proceeds from the sale of the home, you're going to be able to afford to find an area that works for the dynamics? The purpose of the life insurance is so that people are not forced to have to make tough decisions while still grieving. That's the purpose of it.
That is very true because I mean, I've experienced that, and I've seen, or I've experienced it, I've seen others experience that, and it's tricky, obviously, because you're trying to grieve and then you're also trying to pay the bills,
right?
Act normal as possible as you're grieving, and I couldn't imagine like being in a position where I would have to sell the house to just, survive, right, and figure out things like after, because, especially if you have a home, a proper home where you can your head and everything, the one thing you'd want is to protect that.
Absolutely.
Or
or even have the choice
to
say, you know what? I think I want to start somewhere fresh.
True.
And that's, you want to be in a position, you have the choice to say, after the grieving period, however long it takes,
it never stops.
Exactly. Which direction do I want to go? And then then let's talk about the whole grieving period. Because if they have a job, their job may give them time to deal with passing of a loved one. It may be a week to 2 weeks. Let's say they give you, you get 2 weeks and you got to get back to work.
Correct.
Okay, so if you have a life insurance policy, you receive your payout, you may need more than 2 weeks.
Absolutely.
However, so you want to be in a position to say, work, I respect what you're saying. I need more than 2 weeks. If I need to be unpaid time off for an extra 2 weeks, I'm going to do that. What have you? You want to have choices.
That's the most, you know what? I'm glad you said that, because you do want to have the choices whether to sell or start fresh.
Right.
And you do want to have the choice to go back to work or take more time off. Is there, I can't think of anything else. Or I thought in my head as well, you want to also have an opportunity for your loved ones, whether it's your nieces, nephews, children, to have their education secured, right?
Absolutely. And even before the education, because we initially think of the grieving for, let's say, the parent or the spouse, but then the children may need some time to process what happened. And if there's a need for professional help in their scenario, you want to have the opportunity to provide it.
Yeah.
And not assume that they're just going to kind of make it on their own. And you, and as a parent that's grieved, they may not be qualified to say, this is how we do it. To mentor their daughter or the son, that they understand that the parent's not coming home. And they're not supposed to. You're not supposed to kind of have that skill set.
Yeah.
And so either have the choice of maybe, and if they're struggling with it, let's seek a professional to get it done.
True.
But that costs money. It's the truth. It costs money. So when you're properly protected, then let the main focus be you managing the grieving on your own time frame, not the financial burdens of that, and managing all those other issues, managing all those other challenges, like house shopping or even finding another place to go rent while you're grieving. That's not a reasonable stress that anybody should have to go through.
And it gives you actually more anxiety and everything, right?
Yes, absolutely.
So it brings me back to the 3 choices that you mentioned.
Right.
I'm still laughing about the one you said they just don't love you. But of course, we know our family loves you. Even if they irritate you, you still love them, right?
Right.
But then they also don't know how much it costs.
Right.
That's funny, because it's like you don't know what you don't know until you realize how much the cost is.
Right.
And but it also depends on which policy you use as well. Because if there are 3 different type of policies and one's cheaper than the other, and whichever one you want to pick, you got to know which one fits your needs.
Absolutely. And you are addressing a very key topic when it comes to life insurance. If you ask the average person what kind of cell phone plan you should get, they'll be able to kind of qualify to tell you what you should experience, because once we've been able to go to different companies, whatever that's, and keep your same number, people may have an opinion of what experiences to go to. I'm not trying to get you a suit or anything like that. The red telephone company, okay? We're not trying to have you dealing with lawyers, or deal with the blue telephone company, or the green and yellow. We're right. So yeah, or whatever, and they're all still owned by the same three, whatever. But at the end of the day, people have an educated mindset of what to reasonably expect, because it's a product. People, the average person, you don't necessarily be in the telephone communication industry to know everything there is, because from a consumer experience, your education level, what to expect, is known. When it comes to this product, people, when they make the excellent decision to get it, good, the job's done. It's not the exciting topic in the world, let's face it, but the education level of the product is very low overall. And you talk about auto insurance, people have an idea what to get for auto insurance. They've been through this. They shop around every year.
Or they know how to make it cheaper.
Yeah, they're focused. They will shop around for their auto insurance to find out, to insure a car. A car can be replaced. A home can be replaced, but your income can't. So therefore, when it comes to this subject, talk to different companies and hear, because it's not reasonable for me to expect the person I'm sitting down with, whether it's live in the kitchen table or on Zoom, to know everything there is. No, that's just a reality. But from a consumer perspective, if you're confident enough to shop around for different companies for your home insurance, then have the same energy to at least expose yourself to what's out there for the different type of life insurance coverage that you can have, because all life insurance is not created equal.
Correct.
And yeah, go ahead.
Sorry, has there been a time or experience where you had to help someone review their insurance?
Oh, that's how I do. If I don't do that, I'm not doing my job.
What's the exciting story you have? Because I think we've mentioned it.
Okay, so because the way this industry works,
yes,
and this is why clients should talk to different companies to find out what the potential similarities or differences are. Okay. Correct. And because the goal is to get something to protect your income.
Correct.
That's the number one goal. But allow yourself to kind of get educated to say, and just ask some relevant questions. Why this one? Why that one? And based on the professional you interact with, hopefully they can kind of turn a muddy situation from an explanation perspective into a clear water perspective at a client level, so you're not overwhelmed.
Correct.
All right. So when I sit down with last year, sat down with a client that the average person would consider they're good. That could be a whole nother podcast of I'm good. Okay, but that's a separate issue. Okay, 6-figure income earner, lived in a beautiful house, 4-car driveway, business professional entrepreneur, and I was helping them out with their health benefits, but they obviously wanted me to take a look at their policies.
Yeah.
And that's what we do. And obviously that's in the business I'm in. And typically it's not uncommon to have, I see a family to have 2 or 3 policies.
2 or 3?
Yeah, that's common because of the industry that I'm in. It's not uncommon to see that. So I'm thinking I'm going to see 3. She said, yeah, go there. My daughter's there. Just review the policies. I found 1. I found 2. I found 3, 4, 5, 6. There were 12 different policies.
Wait, 12?
Yes. And this 12 different policies for a family of 5.
Okay, I kind of understand, but 12 seems a lot.
Yes, it is, and that's a legitimate question, a legitimate opinion for someone who doesn't have a life insurance license. If we're talking about Life Insurance Awareness Month, and I'm being transparent as possible, this is what happens in the industry. Okay, certain companies in the industry, that they're okay with their representatives to have 12 policies within for one family.
Okay.
Now, when I did the finance, every time I help a client, I do a financial needs analysis. I find out what the true need is.
Correct.
And before we got to that point, because this product is not completely understood, I had to educate the client on what they had first.
Exactly. Yeah.
Because people, that's the second level of the learning curve for life insurance. Stage 1, to get it.
Correct.
Stage 2, do you understand what you have? The rule of thumb that I've started to sharing on my appointments, if you cannot explain your policy to your 10-year-old child, niece, nephew, confidently, you need a second opinion. The industry has a standard of writing out these policies. The average person, unless you have a life insurance license like myself, or you're a lawyer who's exposed to, very versed in legal jargon, what have you, you're just not going to understand how the policy works. And the time that they do get educated is kind of at the wrong time, because that's when the death benefit check is getting paid. And then that's when all the fact-finding questions are asked that ultimately kind of should be asked from day one on the initial point. But people don't know what they don't know. And then we have impressions of why some people don't have life insurance and have maybe a negative because of one experience with one company. So the perception then becomes, this is how it works for everywhere, but not all life insurance is created equal. So I educated the client on how the policies worked. Completed the financial needs analysis. They went from 12 policies to 3. They kept 2 in force because the husband had medical issues, so was not insurable anymore. So it just did not make sense to replace them. But the mother and the children, they are all able to be under one policy that I provided. Same coverage, and the same coverage that they needed, that the financial needs analysis needed, was put in force.
So I have one question with that. And you don't have to give me a ballpark range.
Right.
I know client confidentiality.
Yeah, absolutely.
What was their age range at the time?
Okay, so at the time the policies were started, they were in their mid to late 30s to 40s, roughly around that time.
Okay, so, and because he had health issues, it's really important to take care of that before that is a factor, because
you're addressing a key point, that there's a big assumption people make. This goes back to, I'll get around to it. And when Remember says, when you get around to it, it may be too late, which is too dangerous.
Correct.
So if you're a healthy individual right now, from a cost perspective, you will pay the least amount for life insurance, depending on whatever quantity of coverage, regardless of the quantity of coverage. Right now, based on your age, you will pay a lower amount than if you pay to try to apply for a policy 5 years from now. Because the cost is based on age and gender, but age is a key critical factor.
So wait, which one's cheaper, women or men?
Women's insurance costs less than men's. Yes, that's fact. And there's people who look at mortality rates based on, let's say, that like 1,000 women that are 35 versus 1,000 men that are 35. They study
that the woman
who has a higher chances of passing away. All
Mm.
companies look at this data, and then they adjust their pricing accordingly.
Okay.
So the danger in waiting to, I'll get around to it later, you're assuming 2 weeks from now, a day from now, or what have you, you may not develop an illness that would put you in a situation where you're uninsurable. So when you get a product when you're healthy, this product when you're healthy, even if you do develop an illness later on, which would technically make you uninsurable, but you were healthy at the time the policy was issued, they will pay out. Okay. And the beautiful thing about it is, with obviously the company I work, a medical is being done where they're assessing your health. A medical blood work is being taken out to qualify what rate you're going to pay. The other subject with this that combines this is people say, "Oh, I have insurance through work." Well, we view that as a bonus. The reality is, insurance from work, typically it may be 1 to maybe 2 times your income, if that.
Yeah, I think it's 1.
Yeah, standard is 1, even if you want to pay for more, but ultimately the rates you're getting is group insurance. It's based on all the employees, maybe the men or the what have you. All the employees, you're paying a rate based on essentially your gender and age.
Yeah.
Now, the problem with that is if there's an individual who has an unhealthy lifestyle, still gets approved, they're paying the same rate as that person versus someone who works out, what have you. The only difference might be if someone's a smoker or not. But group insurance policies, they don't do the medicals on you.
So it's just the same. I mean,
So you deserve, if you are very in shape, what have you, you deserve to pay the lowest rate.
Oh, lowest. Oh, okay. Oh, I get it.
Right? So this is why this goes into another subject of why you need to always own your own insurance, because you're paying your true value based on your personal health and not on an averaged rate of a bunch of other people who may not necessarily be in the same medical condition as you.
That is a fair statement. I thought, I was like, oh, well, everyone gets it. But wouldn't you rather get it for a cheaper amount since you are more healthy?
Yeah, because you want to cover your needs. 7 to 10 times your income is what you should have in force.
7 to 10?
Yeah. Because remember, let's go back to the purpose of the life insurance is to replace your income.
Correct. So it's for the ladies and gentlemen listening. So based on what income you get per year.
Yes, absolutely.
You should times it by 7 to 10.
Yes, exactly. That's the ballpark you're looking, because remember, you can have a policy, but if you don't have the right amount, that money could run out.
Correct. Let me do my calculations.
Right. So when you're sitting a true professional,
yes,
when they sit down with you, they're supposed to find out your true needs. Because there's a difference between staying in a home versus potentially having to sell that home. Because the cost of living goes up. And it has. Look at it right now.
Price gone up.
Gas is down to $1.45. It's down to $1.45. That's not something to be excited about. Okay. So, and then groceries and what have you, all that type of stuff. So when we're looking at life insurance, you need to assume that whatever the cost of living there is right now, you can't assume it's going to be
Like
less
that.
later on. It doesn't work that way.
Never.
It just doesn't work that way. It's obviously we're in a very unique period of inflation, what have you, where it's not sustainable, but at least 3% more than it was right now. You can expect life to cost that much
Exactly.
in the future. So when we talk about the coverage amounts, we have to factor in replacing your true needs and really the cost of living in the future as well. So, when we sit down with people, those are the questions that you need to have. So, going back to that client, they were someone that was perceived to be as good. They're a professional, self-employed professional, being overcharged because I was able to save her $201 per month. You multiply that total times 12. You multiply that total times the 20 plus years that she's planning to pay for that policy. And that's like over what, $50,000 to $70,000 difference. And then that individual didn't set up an investment account for them.
Okay.
And that's a self-employed individual. So one of the things that I'm excited to do is we had to set up a retirement plan.
Okay.
For later on.
Yeah, absolutely.
And then also cover your needs for the time that you need it.
Now you have me thinking. Now the hamster. So you're telling me this basic as possible.
Yeah.
They are self-employed, 6 figures, covered with life insurance, but not having their money work for them?
Yes, that was the scenario. And I was with the savings, I was able to put some money towards an investment account for them so their money they could take advantage of compounding interest because that's their pension. They're self-employed.
Yeah.
So they have to put, self-employed individuals need to put their money, a portion of their money away to take care of that's their retirement money, because they may not be able to work as long as they want to. Their body may say you may have to retire earlier than you're on schedule for, than what you wanted to.
Yes.
So
and the reason why I said it like that is because I want folks to hear what I just said. And no matter what, as hard as you want to work, you can't work as hard as your money can work for you if you understand what you just said, compound interest.
Absolutely. Because money, when it's invested, doesn't call in sick. Working 7 days a week.
The stock market.
Yep. Working 7 days a week, 24 hours a day.
That is true. So, okay. So that's actually a lot. You managed them to save $250.
Yeah, it was $201. $201.
Sorry, $201. Sorry.
Yeah, $201. Yeah. That total always sticks out. $201. Like, wow. Okay, this is huge. This is a big difference.
Okay, and which equals to 2,400 or 20. Sorry, let me do actual numbers.
Yeah.
2,412 a year.
Okay, and then multiply that by like 25 years.
60,300. My gosh.
That they're on track to be paying. So now that money can go towards an investment account.
Correct. So is that what you obviously that's what you promote most of the time. If you're going to reduce your life insurance policies, spending, or whatever your budget was for your life insurance, take that money that you're saving and put it into investing. And
that's only after I found the facts of what that client's situation, because some people may have to be starting both, and they may not necessarily had a policy in place first. But after finding out the facts, doing the analysis, then it's the facts that I present And the client says, that makes sense. So it's not necessarily me saying it. I say, no, you should do this. We show the facts, and the numbers say, hold on a second. I'm in a better situation by going with this alternative.
Sure.
And then that's how that's only, and because it's all about making sure they have the right amount of coverage. There are some situations where they're underinsured, and they may have to end up paying more money. And you know what? I'd rather show the truth on what you should have, because if there's children involved, it may make sense paying the more $20, $30 more per month.
Yeah.
Because people spend that money frivolously in so many other areas. And to ensure your income, spending more money might be the logical decision, because you got, especially with the cost of living. Because we look price of homes. People have an opinion on the price of the homes in real estate. The real issue isn't the price of the homes. The real issue is their income, current income, cannot put them in a position to afford a new home. Therefore,
some of them are expensive right now, you know.
I know, but put it this way: if Sprite at your convenience store did 1.5 liter bottles,
I'm a 7-Up lady.
Okay, you're a 7-Up.
Or ginger ale.
I won't fight you. This is your podcast. This is your podcast. I will not fight you on it. We'll talk about this later on, and I'll bring you around. But okay, so 7-Up. So yeah, ginger ale. That's our medicine. So you can't go around. Ginger ale is our medicine. So great, ginger ale. So the average price of ginger ale goes up to, let's say, $4.50 a bottle across the board. Okay, it's not really going to be news headlines on CP24 bulletin, because everybody's current income can absorb that price increase.
$4.50.
They may not like it, but they're not. It's not going. But the cost of real estate has jumped up so quickly in the last couple of years. Their income, if everybody's income was averaging $450,000, okay, real estate homes $1 million, what have you. But their income hasn't jumped. So the real fear when you pull down the layers is, well, if this costs this, my money can absorb that price increase. Therefore, it's in everyone's best interest, if they currently have a mortgage and you're not mortgage free, to insure their income, because if one of the breadwinners don't come out, can they afford can their current income afford either their current mortgage or even a new mortgage, whatever the situation is.
Golly.
So it really circles back to really protecting that income, and the cost of living right now, it just drives that point home so much. That's why when we see these GoFundMe is a way address the funeral needs, but there's life after the funeral. There's life after the funeral, and having a policy addresses that.
Correct.
Simple as that.
And I'm glad you're able to explain the 3 common reasons, like to the T, and give a solution.
Right.
But obviously, we didn't know all of this back in the day. So what were the 3 things you wish you knew growing up about like personal finance or anything?
Okay, great question. So the rule of 72. Something that we could have learned in elementary school.
That is very true.
It's
I should do a whiteboard on that one.
Yeah, elementary school. It's also known as the banker's rule. But when I've gone into all the different branches that exist, it's not something that gets discussed.
Let me see if I can add it. I hope it works.
So, you can even do a live demonstration. Oh, you're doing.
I'm gonna try. Okay,
all right, there you go for it. So,
because
go.
Because you know why? Because because a lot of people, I mention this like all the time, and I don't think people take it in.
Right.
So let me don't laugh at me though.
No, not at all. Let's let's go to 70. Yep.
OMG. I think I should do it as nope.
There a text box that you can
Yeah, I'm gonna do the text box.
Yeah.
There we go.
I just learned about the text box just the other day. So, and I've been zooming for a couple of years, and I was like, yeah. So
Right?
divided by So let's go with a 3%.
Okay, so and I'm gonna say I equals the interest rate.
Yes.
Okay.
There you go.
So people see. Anyone that's watching, don't laugh at me at what just happened a second ago. But okay. So 72 divided by 3%.
Yep.
Mm-hmm. Well,
Okay. And for the interest rate, make sure you know the percentages, right?
oh yes.
Yeah. So they can kind of get it because they can do their calculation on their calculator right now. Okay.
And I believe that's 24, obviously.
Okay. So that 24, but that's what that word obvious is. It's not obvious to the general public.
You know what? You're right. But
it should be obvious, but it's not because we're not taught what this means. So if you go into a location that deals with money, and they say, or you see a sign, or even say a credit union that says we can guarantee you an interest rate of 2.2% or 2.3%. The 24 years is the amount of time it's going to take your money to double.
And you know, it's a joke.
Mm-hmm.
Back in not back in the day, but like a year ago or so, it was a 1.25.
Yeah.
And it just increased to 3%. I think it's about to go there. So we'll take 24. So let's say we had $1,000.
Or you can go with 10,000.
10,000? True.
Yeah, you have 10,000.
So it will take 24 years for me to get 20,000.
Right. And another 24 years.
Yeah, 40,000. No. I'm mid-30.
Or 40 years. Yeah. And that's the issue. How many doubling periods do we have? So when you talk about what I wish I would have learned earlier,
this is one of them.
Like as this business was presented to me.
Correct.
Because I got into the business as another source of income. Here's a different way to earn a different income without working the same hours as a traditional job. So work shorter hours and earn almost equivalent and sometimes even more income. That attracted me to this. Then I learned about this rule. And knowing that the majority of people have their money invested getting that rate of return, when if you do, and for people online, do that same calculation, 72 by 6, 72 by 12. It's important for people to know that rate of return is out there, but it's who is exposing you to that rate of return through your investments.
Agree. Because even though right now the stock market is scary, I'm not gonna lie, when I started investing, like actually investing in 2018, first it was like, I actually looked at it the other day on Mint because I'm obsessed with my portfolio. So it was like this, it's like, it's going up, and all of a sudden, it went up, and I was like, awesome.
Right.
Because I knew I wouldn't get the same results in my savings, and I had to adjust. I had to just tell myself, I'm willing to put at least $1,000 in at first, see how it goes, and then continuously add to it. And it wasn't until like 2020 is when I actually started putting money in religiously every month. Because before I was like, here or there, not until Questrade one time, it was like, oh, you didn't put any money in, we're taking $25. I was like, pardon me? I beg your pardon. And you know what? There's other financial institutions that do that as well. If you're inactive, but this is before, if you're inactive, they will take money from you because you're inactive. So it's like, what's wrong with you? What is wrong? So, okay, so rule of 72.
Right.
What's the second thing that you wish you knew?
The second thing, I guess just debt, and kind of connects to the rule of 72 and how the consequence of not, because it can work for you to grow your money, but then it can work against you when you owe money.
Right.
That's something that learning earlier would have had to, if I had a better handle on, that information would have been very valuable. The third thing was just the advantage of exposing yourself to mutual funds, and where you're kind of involved in the stock market, but just in a way that's less stressful.
And I think so. With mutual funds, I do have mutual funds. And I also have ETFs because they're quite similar. So I like the basket and of actually no. What are mutual funds? Because there's probably some folks that don't know. Even though if they're on episode 96, them should know. But
great. So essentially, so mutual fund allows the average person to purchase units of stock in a company with lots of other people for the main purpose of getting their money to grow and increase in value. The exciting thing about when you have money invested in mutual funds, you're dealing with qualified elite fund managers that are responsible for, depending on the portfolio, millions of dollars of assets. So a company is going to pay a fund manager a healthy six-figure income to grow thousands of clients, essentially, investment portfolio. That's their day-to-day job. So as the average person gets to leverage the expertise of someone who their 40-hour work week, for them more than 40, dedicated, looking at the stock market, looking at various companies, and not just researching companies online. They can go sit in the boardroom of a company that you and I don't even know about.
Yeah.
And have a conversation. Say, so where's your company going? When someone's exposed to, because we're kind of talking about a subject of, either self-directed investing or taking advantage of investing in mutual funds.
Correct.
Leverage, because the average person, if they have a regular job, they have their family.
They don't have to.
They really have to question the amount of time that they're actually paying attention to what's going on globally.
True.
They have their life, family life. So by the time they get to, log on, at that time, key developments within the market might have already happened already. So people have the choice to either try to essentially do a better job than fund managers that are getting compensated six figures to do their job. Or you can leverage their experience, still get educated on what's going on,
I
because
was going to
a
say that.
a proper company will have online statements so you can kind of see what's going on a regular basis.
Correct.
So you're not out of the loop. A true proper investment company will give their clients access. Let me see what's going on with my money today, tomorrow, the day afterwards.
I think that's the best thing that you just mentioned is educating folks, because I always tell this to everyone when it comes to like jumping into investing, you have to at least know like some of the basic, or like say like they lose that mutual fund advisor, but they have no idea what's going on in their portfolio. You're just back to square one, right? So you, even though you do have work life, you have family life or social life, whatnot, I think it is still great to have a little bit knowledge of what's going on.
Yeah,
Whether you want to spend a half an hour, a week, or a month, whichever.
Right.
It especially right now, like this time is the best time to start investing.
I'm so happy you mentioned that. I'm
Especially
so happy.
Especially this week.
This is the best. This is because investments, mutual funds are on sale.
Yep.
They're on sale right now.
Yes.
So we don't necessarily have to wait. If you have RSPs, wait to RSP season. Now's the best time to invest some money.
Yes.
Because when things are great, you're not going to be able to buy as much because the value is higher. So you talked, what you just talked about is a subject called really dollar cost averaging. So
I've learned the hard way.
And that's and hey, what you learn, that's the most important thing. And that's why when you work with professionals that can help shorten the learning curve.
Yes. Absolutely.
And just kind of understand how a portfolio is developed in terms of the variety and why it's variety and what have you. And then your job as a client is to be consistent and be with your investments. That's your number one job, is to be consistent with investments and position yourself to kind of increasing your investments on a monthly basis, so that you have options in retirement.
All right.
So, so that's one of the things that I'm very excited to learn. So you come back to, the life insurance awareness fund. The company I'm with, we're excited to address both needs. So in case you pass away too soon, income's protected. In case you live longer, we want to get you to the point where you have your retirement assets from your investments to draw upon.
And everything.
Exactly.
You're what's the word?
Self-insured.
Self-insured.
You're self-insured, financially independent.
And independent.
And for the company I work, get to a point where you can even say, maybe you don't need the life insurance anymore because my investment portfolio has achieved my goals. Yeah. And I can draw upon it to do my needs, and I still can leave an inheritance to my children, because the children like the idea of getting an inheritance, whether it comes from a policy or your investments.
True. And that's Absolutely. I think that's one thing, especially our community have to think about, is protecting the income, as you said. So we have choices while we're grieving.
Right.
And also generational wealth.
Yes. Giving a lump sum to allow, once immediate financial expenses are kind of dealt with, okay, so putting money aside that can get invested for your child, so that when they come, they're starting with a bigger pot than maybe what you started with. And that bigger pot is going to give them more options.
Exactly.
So, and with that bigger pot invested for themselves, still be able to get that, allow the money to take care of day-to-day needs, give themselves options in terms of home ownership, assisting with a down payment for home ownership, but getting that money to continue to compound,
Mhm.
so it's there for their retirement. And
Got
then they can kind of maybe pass that a portion of they're going to take what they need and then pass it down onto their kids. So having that life insurance definitely can be a launching pad.
Mhm.
Obviously, nobody obviously wants a loved one to pass away. We understand that, but it's just a reality of life. And we can't be numb to think, oh, it's not going to happen to us, because clearly it happens to a lot of people. And
Absolutely.
it's just an opportunity. This isn't the only game plan, though, for that. It's
True.
just a portion of the puzzle. The investment is the other key portion of the puzzle to generational wealth. Okay.
Tetris.
Okay. It's just a portion of it, and it can be used the right way, but that's not the only deal for that to happen.
Yeah.
But yeah, it's
It's,
very, very important to have it up.
and I'm glad you're able to share all that stuff. But Neil, I have a question also. What are
Sure.
the other things that you're currently doing? Because we see a lot of prizes
Oh,
and some,
okay.
we
Okay.
see a lot of medals and things.
Well, the company that I'm with, we're very huge for recognition.
Okay.
Okay. So when you receive certain targets, they'll
Mhm.
give you awards and recognition.
Nice.
So in terms of other business ventures or anything like that,
Yeah.
my focus is just this,
Yes.
and sharing the opportunity with others.
Okay.
So yeah, so this is the main focus for me. In
Okay.
terms of outside hobbies, as we discussed earlier, I'm really excited in cycling.
Yes.
It's a great exercise for me. I love it. Love getting on the road and or finding different paths in the area that you live on, and
Mhm.
yeah, that's a passion for me. And uh, last summer, I was able to ride on the DVP when Mattamy Homes, they sponsored events for brain research, I believe. So
Mm.
it was fun to ride on the Don Valley Park Parade, and you see people of all different people that are on it, that like guys who are women that are like riding like 6:30 in the morning, and they've already ridden 20 kilometers already, and you're just driving away like they've been on it. You see those individuals, and then you see individuals that are just want to get into cycling. And so yeah, that's another big passion of mine right now is the cycling and stuff. So
I should totally try that. We were mentioning I'm thinking of doing the Scotia Bank. So if I do it, I'm going to announce that and try to get some donations and all that stuff. I'm thinking about it, but I have to do a little training, you know?
yes, yeah, absolutely. Make the experience as pleasant for yourself
Enjoyable.
as possible. Don't
Exactly.
don't let the big DVP be the first one. It's not fair for your body, because your body will let you know. Your body will let you know. Oh, really? This is what you're doing to me. We had no discussion about this, and this is what you're going to put me through. You know what? You're going to feel it today. You're going to feel it now, and you're going to feel it in the morning. Okay,
It's so
so
true.
your body will let you know. So
Boy, it is very true. And Neil, where can the folks find you? Because I'm gonna put the description in the I'm gonna put your contact and everything
yeah,
on the episode.
okay.
How do you want folks to reach you?
They can reach me on Instagram,
Okay.
um, or Facebook at Neil Messias. Instagram's Neil.Messias. So spend Neil
Mm-hmm.
Messias. So either way, Instagram or Facebook, they can reach out to me.
Mm-hmm.
Or yeah, and my cell number 416-580-0007.
All right. So I'm gonna put everything in the description and all that good stuff. Is there anything you'd like to tell the folks before we wrap up?
Sure. I would just, folks, we're at an age and a generation, I almost call it the no excuses age. We're at the no excuses age.
You think that
You have children, It's 2022. You need to get life insurance. Then the second thing is just having it is stage one. Mm-hmm. Understanding how it works is stage number two. You deserve to know how it works. We have to move past the same way you know your cell phone bills and all that with your life insurance policy. The most important thing that you can have for your family, you need to know it. I'm not saying know enough to go sell it, but understand how it works and who's going to get the beneficiary and when things change. Bottom line, if you cannot explain it confidently to a 10-year-old child, then you need a second opinion from a professional to break it down. This is how it works. Is this product what you want it? Because all life insurance is not created equal. Sure. And I'm here to let's just show the facts. So it's not me saying it, it's the facts saying it. And then when you have a general understanding, then you can determine whether you kind of keep those policies or change it. But we're in the no excuses age. Okay. And so learn your policies, know where they are. They can't be in that fourth drawer that in the basement that you never look at. No, you need to know your policy. Your family depends on you knowing, because they can't be the ones getting educated when funeral arrangements are being made. It's not fair for them.
That's very true.
It's not fair for them to try to understand who to call to get no. All that stuff should be known. And so there's no excuse with the level of technology, phone numbers, every family member has a phone. Everybody's supposed to know what's happening. Okay.
I love that, Neil. I love that. Because it's true. I'm definitely gonna put that as a hashtag. No excuses.
Yep, absolutely.
Right. And Neil, it's been an honor.
Oh, this is my first time on a podcast. This is huge. This is thank you.
It's not the last.
No, absolutely right? Not the last for sure. Not the last for sure.
Because I think someone's going to have a podcast soon as well. But we can talk about that off.
Okay, cool. Awesome.
But yes, folks, Neil, make sure you like, share, subscribe, and make sure you contact him, because there's no excuses anymore. You know?
Yeah. Well, let's just find out the facts. Find out the facts so you know. I want you to you deserve to know how your policy works. You just deserve to know. That's it. You deserve to know how your policy works. I'm here to help.
Awesome. And on that note, we're gonna wrap up with our song and all that good stuff. You already know it's Flip and Floss. But till next week, folks.
Anywhere.
God of Fame Music.
A ville, flip, floss, money, literacy boss. Flip, floss, money, literacy boss. Flip, floss, money, literacy boss. Flip, floss. Anywhere, chop, flip and floss, money, literacy boss. Greatness in our blood because you're working for your cause. Flip and floss, money, literacy boss. Yeah, boots up your knowledge for your minimal cost. Yo,